How many projects will survive this crypto bear market? As the crypto market continues to evolve, projects come and go. Whilst in a bull market new projects appear all the time, bear markets are not so kind. A quick glance at the history of coin market cap shows how many projects have long since died while just a few remain near the top. The answer to the question of which projects will survive will vary depending on who you ask. Bitcoin remains king, never losing its #1 spot. However, the #XRP Army, Ethereum fans, and many other fans of different coins have long since claimed to be the Bitcoin killer. 2014. Image, SMC 2014. If we take a look at 2014, there are a few on this list that are now past the point of no return. Quark has slipped to the lower rungs, with the most recent total 24 hours volume being a whopping $17. This Bitcoin killer killed itself. 2015. Image, SMC 2015. Paycoin was a new entry in the 2015 market. This didn't last too long, though. At $3.20 in 2015, Paycoin once had an ATH of over $8 in 2014. Since then, the coin has suffered greatly. Currently trading at $0.008, the 24-hour volume is a mere $8. Another casualty of the crypto markets. 2016. Image, SMC 2016. By 2016, we begin to see many coins and projects that are still in or close to the top 10 today. Bitcoin, XRP, Ethereum, and Dash have all still maintained a large market share. NXT, however, hasn't performed so well when we compare 2016 to today. Whilst still performing okay price-wise, they have slipped outside of the top 100 market cap coins, which suggests either it has become extremely underrated or was too overrated to begin with. Since the bull run of 2017, we are still yet to see the true purge of poorly managed and executed altcoins. For the majority, history shows us that being in the top 10 doesn't mean you are guaranteed success. Whilst a few coins have survived to this day, many more have failed. For those people who speak of Bitcoin killers, so far, they have all been proven wrong. Bitcoin has never lost its top spot. This doesn't necessarily mean it's impossible for it to lose the top spot in the future. But history has shown that we should be skeptical of those who pushed such a narrative. How many projects are going to truly suffer in the current top 100? My guess would be way more than you would like. The process, however, is healthy for the space. As more and more poor altcoins die, the cream will hopefully rise to the top. What are the barriers preventing the mass adoption of blockchain? Blockchain is the distributed ledger technology that regulates cryptocurrencies, and its benefits are increasing through many industries. Yet, despite all the major benefits of blockchain, there are still numerous barriers to mass adoption. Restricted internal barriers. Many businesses are still working on evaluating the technology's feasibility or comparing different blockchains, instead of focusing on actually developing practical ways it could be put into practice to improve business operations. Companies are experimenting with private, permission, blockchain models rather than open, public, blockchains. This is due to public blockchains being seen as a bigger data security risk. Lack of understanding. Misunderstanding and a lack of general knowledge of the technology and its capabilities form some of the most compelling barriers to blockchain technology adoption. Many organizations don't fully understand what blockchain is or what it can do. However, even if people learn more and become more knowledgeable, the issue might arise in which companies become resistant to changing existing systems because of the cost and time. This then causes a whole new barrier within itself. What companies need to understand is that the benefits of blockchain greatly outweigh the costs. Therefore, if they want to stay modern and up to date with new technologies, they need to be able to justify the costs. Difficult to use. Blockchain technology is still very hard to use for some, with most people needing to learn the skills and knowledge before they go on to use and implement it. A user must know how public and private keys work as well as have an understanding of all the blockchain platforms. Developers face many challenges, including knowing how and being able to build on top of blockchain technology. They also need the tools to be able to build better software with the help of blockchain. The key is to be able to use many blockchains, not just one. This means the future is not a single solution, but many blockchains and many solutions all addressing similar issues. Industries. London-based accounting firm Deloitte has published a report which finds that mainstream adoption of blockchain technology still faces significant obstacles and challenges. Although barriers to adoption are gradually decreasing, for most enterprises, obstacles have kept the value of blockchain more perspective than actual, and commercial adoption thus far remains limited. Because of its relatively poor performance, many observers do not consider blockchain technology to be viable for large-scale applications, says Deloitte. To resolve this issue, developers are creating new consensus mechanisms. A consensus is how participants in a blockchain network agree a transaction recorded on the blockchain is valid. In this regard, blockchain developers are exploring newer consensus mechanisms, such as proof of burn, proof of capacity, and proof of elapsed time. Cognizant surveyed over 1,500 European business decision makers across the banking and financial services, manufacturing, retail, healthcare, and insurance industries, and there seems to be a reluctance to collaborate with other businesses on blockchain development, meaning it may take longer than necessary to make blockchain mainstream. The vast majority of European firms intend to develop their own modeling techniques, with only 2% planning to join a consortium of startups and competitors. Greater awareness. In conclusion, a greater awareness of the blockchain technology is imperative. It has already proven to have a sizable benefit to all major industries. It is now time the adoption of blockchain becomes mainstream.
Report: Court ruling to return mistakenly sent cryptocurrency could set precedent. A December 12 business law blog post from the University of Oxford Faculty of Law notes possible repercussions for lost and stolen crypto claims following a case in a Canadian trial court earlier this year. In the post, Safe Frankfurt researcher Gregory Pustovit notes the case of CopyTrack Limited v. Wall. The Superior Trial Court of British Columbia ruled that Ethereum, ETH, tokens, which were mistakenly sent by the plaintiff, Singapore blockchain startup CopyTrack, to the defendant, Brian Wall, must be returned to CopyTrack. The defendant mistakenly received 530 Ethereum coins from CopyTrack instead of 530 CopyTrack, CPY, tokens that he was supposed to receive after participating in CopyTrack's initial coin offering, ICO. The Ethereum amounted to 495,000 Canadian dollars, $370,482, while the value of CPY tokens he intended to purchase was 780 Canadian dollars, $583, at the time. This precedent may have major repercussions for the enforcement of claims regarding lost or stolen cryptocurrency, Pustovit claims, as the ruling allows the plaintiff to trace and recover tokens in whatsoever hands those Ether tokens may currently be held. As professional services for tracing digital assets develop, the rightful owners of certain assets could trace them on a public ledger and ostensibly recover tokens once they appear in an exchange's wallet. Pustovit states that blockchains are not only governed by their code, but by the laws of concerned jurisdictions as well. While noting that cross-border enforcement of varying national laws and regulations could prove difficult, The blog says that crypto businesses will likely comply with judgments in jurisdictions wherein they have strategic interests. Pustovid also states that the Canadian court missed the opportunity to define the legal character of cryptocurrencies because it could not be handled through summary judgment. Since the defendant was deceased, there would be no practical utility in sending this matter to trial. The court therefore ruled the Ethereum tokens to simply be the property of the plaintiff and that they should be returned. Claims in conversion and detenue were left unsettled. While the legal status of cryptocurrencies in case law remains hazy, there is an increasing number of decisions recognizing that other intangible assets, for example funds, shares and mineral interests, may be subject to claims in conversion and detenue. Canada is reportedly one of the most crypto-friendly countries, with its favorable regulation of the industry, and low energy costs for crypto mining. In the summer of 2018, the Canadian government issued an official draft regulation for crypto exchanges and payment operators. Additional reporting by Helen Parts. Hyperledger onboards 12 new members including Alibaba Cloud, Deutsche Telekom, and Citi. Hyperledger has onboarded 12 new members, including such major firms as Alibaba Cloud, Citi, and Deutsche Telekom, according to an announcement published on December 11. Launched in 2016, Hyperledger is an open-source project created by the Linux Foundation and created to support the development of blockchain-based distributed ledgers. The new members were announced at the Hyperledger Global Forum in Basel, Switzerland. The latest general members that join the initiative include Alibaba Cloud, a subsidiary of the e-commerce giant, financial services firm Citigroup, Deutsche Telekom, one of the largest telecoms providers in Europe, and European blockchain trading platform We.Trade, among others. Hyperledger Executive Director Brian Behlendorf said that the growing Hyperledger community reflects the increasing importance of open-source efforts to build enterprise blockchain technologies across industries and markets. Beth Devon, Head of Innovation Network and Emerging Technology at Citi Ventures said, "We believe blockchain has the potential to drive new forms of efficiency and develop new markets, and are pleased to join the Hyperledger project to advance our exploration." This month, the Hyperledger Technical Steering Committee approved the URSA project, a modular cryptography software library. URSA is meant to avoid wasted work on duplicate projects, enhancing security by simplifying analysis and making it less likely for less experienced people to create their own less secure implementations. In October, the Central Bank of Germany, Deutsche Bundesbank, and securities marketplace organizer Deutsche Börse, DB, successfully completed the trial of a blockchain solution in the settlements area. The transaction volume and speed of a production system were tested on the Hyperledger Fabric Framework and Digital Asset, a distributed ledger, DLT, solution for the financial sector. Major stablecoin basis to close, return funds to investors, sources. Major United States-based stablecoin project Basis will shut down operations and return most of its funds to investors, crypto news outlet The Block reports today, December 12. Citing multiple people with direct knowledge of the situation, the report states that the algorithmic stablecoin project is set to return the majority of the $133 million in funding it raised in a private placement in April. Basis investors include major names in venture capital, among them Bain Capital Ventures and Andreessen Horowitz. The Block reports that the firm plans to communicate directly on the reported shutdown later Wednesday evening, again citing a source with direct knowledge of the situation. In private correspondence with Cointelegraph today, Nevin Freeman, co-founder and CEO of competing stablecoin project Reserve, commented that the move is evidently due to regulatory concerns around one of Basis token types. Freeman stated that, as with other algorithmic stablecoins, Basis protocol implements a secondary token, in this case known as a bond token, which needs to be purchased in order for the primary token to keep its stable peg in place. In many cases, these secondary share or bond tokens are securities, under U.S. law, Freeman told Cointelegraph, implying that the regulatory headwinds allegedly behind Basis' decision to shut down come from the U.S. Securities and Exchange Commission, SEC. Freeman added, "Since there is only a small set of people who can, legally, buy these share or bond, unregistered, security tokens. Protocols based on this mechanism may be at risk. If nobody wants to buy these tokens when the stablecoin is trading below the peg price, the peg will just stay broken. Freeman whose project also completed a funding round earlier this year, with backing from high-profile investors including Peter Thiel, Coinbase and Distributed Global also noted that not all algorithmic stablecoins will suffer the same fate, continuing, designs can even include share tokens, so long as they aren't the direct source of capital for purchasing stablecoins out of circulation. Basis did not respond to Cointelegraph's requests for comments by press time. Various models of stablecoins have surged in popularity this year, with major fiat-backed coins gaining the spotlight in the past few months. In October, top crypto exchanges Huobi and OKEx both added 4 major fiat-backed stablecoins: USD Coin, USDC, TrueUSD, TUSD, Paxos, PAX, and the Gemini Dollar, GUSD, to their platforms. This week, research firm Dyer published an analysis saying that the adoption of stablecoins is growing based on the increasing number of on-chain transactions. As per the study, the same 4 major stablecoins to date have broken the $5 billion mark in on-chain transactions within the 3-month period.